Good morning and welcome to the BetaShares August webinar, and it's the investment case for cybersecurity. We want to remind everyone today, before we start the broadcast, anything that we talk about today is general in nature and does not constitute personal financial advice. Before making any decisions or investment choices, please speak to a professional. Our presenters today, and we're joined in the US by Dave Gedeon from Nasdaq. Dave is the Vice President and Head of Research and Development at Nasdaq Global. We're also joined by Gaurav Pendse, and he's the Product Development Specialist and author of the Cybersecurity Investment Report and Investment Case, which we'll be talking about and referring to throughout the session. And from BetaShares, we're joined by our very own Adam O'Connor, Director, Distribution and Capital Markets. We've got absolute specialists in the room today to talk about the investment case and the trend of cybersecurity and what's going on. So I'll hand over to Gaurav to start us off about the cybersecurity investing and industry report and investment case update. Over to you, Gaurav.
Great, thanks, Sarah. And hello and good morning, everyone. I'm Gaurav from Nasdaq, and I'm going to talk about the cybersecurity industry and the investment case for the BetaShares Global Cybersecurity ETF. So first, I'm just going to describe what cybersecurity is and why it's important. And then after that, I'm going to talk about the various growth factors for cybersecurity. And then lastly, I'll cover the overall industry outlook for cybersecurity. And after that, I'm going to hand it off to my colleague Dave, who will then talk about the underlying index for HACK, the Nasdaq CTA Cybersecurity Index. So moving on to the next slide, cybersecurity focuses on protecting computers, networks, programs, and data from unauthorized and unintended access. As this table here shows, as we go more and more into the digital age, almost every single industry faces issues related to cybercrimes. In fact, there are many different types of cybercrimes that can affect industries in different ways. So, for example, in this table here, we have point-of-sale intrusions, which are remote attacks against places where credit card, present retail transactions are conducted. So this affects the accommodation industry almost exclusively, as about 82% of incidents for the accommodation industry were due to point-of-sale intrusions. And another example that we have is denial of service. So these are attacks intended to compromise the availability of networks and systems, which can result in performance degradation or complete interruption of service. And we see that denial of service is very common across multiple industries. And we can see in this table here that it affected nearly all the industries in this table, but it affected financial, education, and retail industries the most in 2017. Moving on to the next slide, as governments, corporations, and pretty much all of us collectively are processing and storing vast amounts of data across networks, this increases the necessity for cybersecurity services that can protect people's identities and safeguard their information. There have been many cases recently of cyber attacks, including the Equifax data breach, the Uber data breach, and the WannaCry cyber attack. And the Equifax data breach, for example, affected more than 143 million US customers. And this incident is unique because the type of data that was breached has perpetual value, as people's social security numbers, names, phone numbers, and credit information was hacked. This type of data is very valuable to hackers because it does not really change over time. Another example we have is the WannaCry attack. This type of ransomware attack, which is a type of primeware, targets computers by first encrypting the data and then demanding ransom payments in exchange for return of service. Specifically, the WannaCry attack targeted people running the Microsoft Windows operating system and demanded payment in Bitcoin. The attack ended up affecting many countries such as Russia, Ukraine, and Taiwan, and was spread through standard file sharing technology in PCs. And the last example that we have here is the Uber data breach, and it provides another example of the reputational damage that corporations fear to the extent that they then have to cover up the breach, which ends up being worse than the data breach itself. In the case of Uber, it disclosed that more than 57 million accounts were hacked, and the hackers had demanded ransom payments in exchange for deleting user information. So Uber covered it up, paid off the hackers, and only much later did they reveal the true nature of the breach. So these cyber attacks, along with many other ones, highlight the devastating ramifications that cybercrime can have on people, governments, and organizations, and stresses the importance of cybersecurity services in a digitized world. So now that I've talked about what cybersecurity is and why it's important, I'm now going to go through the various growth drivers for cybersecurity. So the increasing number of cybercrimes is really the main growth driver for cybersecurity services. In fact, President Trump, in his 2019 budget proposal, stated that cybercrime is one of the biggest issues facing national security. His 2019 budget proposed to allocate almost $15 billion to fund cybersecurity initiatives and research, which is up from the $14.4 billion budget proposal in 2018 and the $13.1 billion budget proposal in 2017. This constant increase in the White House budget for cybersecurity services highlights the growing demand from governments that's one of the main drivers of growth for the cybersecurity industry. And going to the next slide, looking at it from a sheer number of attacks perspective, the chart on this slide shows that even though the total number of major and publicized attacks that make it into the news worldwide has decreased month over month for a few of the months from 2016 to 2017, there are still sizable and consistent number of attacks occurring worldwide on a monthly basis. And specifically going to the next slide, in looking at a snapshot in March 2018, the data in this slide shows that the distribution of targets in March, along with the various ways in which these attacks were carried out. And the charts illustrate that individuals, public administration, and financial services were the most targeted industries in March of this year, and malware and account hijacking were the most popular modes of cyber attacks. This data on cyber attacks and incidents clearly shows the continuing need for cybersecurity services from various companies. And moving on, aside from the growing number of targeted attacks that is driving the growth in cybersecurity, another aspect that highlights the growth in this industry is venture capital funding. VC funding is very important because it shows the growth of startups in cybersecurity space, and it is a leading indicator of the overall growth of this industry. The chart here in this slide shows that even though the dollar amount of funding slid a bit in 2016, the total number of deals grew from 391 to 421. And there were almost 47% more deals in 2016 than there were in 2013. In fact, in aggregate, VC firms have invested almost $13.6 billion into cybersecurity companies since 2013. So the data that I've described thus far about government budgets, cyber attacks and incidents, as well as venture capital funding have been some of the main growth drivers in this industry. But now I will talk about the outlook for this industry, which will show that it is important to have exposure to cybersecurity companies in your portfolios. But before I go into detail about the industry outlook for cybersecurity, it is important to note that almost any data I reveal about the future of this industry is likely an underestimation. This is because a lot of corporations are hesitant to reveal data breaches and cyber attacks that they've been exposed to for any fear of reputational damage, just like we saw in the Uber case that I mentioned earlier. Due to this reason, some analysts expect the industry growth rates to be at about 12 to 15% year over year through 2021, which is higher than the 8 to 10% being predicted by some analysts right now. With that said, estimates show that about $670 billion will be spent on cybersecurity initiatives to protect PCs, mobile devices, and Internet of Things devices by 2020, of which about $386 billion will be spent on PCs, $113 billion will be spent on mobile devices, and about $172 billion will be spent on protecting IoT devices. This shows that while protecting PCs will still be a major part of this market, mobile and IoT devices are also sizable in nature. In fact, on this slide here, Bloomberg and IDC estimate that the largest areas of growth within cybersecurity are mobile security, IoT security, and specialized threat and analytics protection. The chart here shows that while these three growth areas are dwarfed by the overall IT security market, the projected compound annual growth rates for mobile security and IoT security and specialized threat analysis and protection is much higher than that of the overall IT security market. For example, the specialized threat and protection segment is only $1.5 billion in size, which is minuscule compared to the $35.2 billion IT security market. But its projected growth rate of 28% is much higher than the 5% growth rate for the IT security market. This shows that these three areas will continue to help propel and expand the cybersecurity industry going forward. And going to the next slide, another way to show the outlook for the cybersecurity industry is to look at the cost of cybercrimes. And if that cost is rising, then it means that the demand for companies offering cybersecurity services is improving. The chart on this slide shows that the global average cost of cybercrime has been continuously rising for the last 5 years, from $7.2 million per cybercrime in 2013 to almost $11.7 million per cybercrime in 2017. That's almost a 63% increase in the cost of cybercrime in that time frame. This shows that as the cost of these cybercrimes continues to go up, corporations and governments are taking a much closer look at ways to prevent the monetary and reputational costs of these cyber attacks, as it begins to affect their bottom lines more and more. This is clearly a positive for companies that offer cybersecurity services, because as cybercrime costs continue to rise, the demand for their products and services will continue to rise along with the rise in costs. So there are many different companies that are involved in the cybersecurity space. They cater to different needs and offer a variety of services. And now I'll speak to a few of the companies to provide an idea of the types of products and services offered in this industry. So Splunk is a great example of a company that provides software solutions that enables organizations to gain operational intelligence in real time. They collect and index machine data, which is data such as timestamp record of various user activities, user behavior, and security threats. Their main product, Splunk Enterprise, collects and analyzes all of this machine data. And this product enables them to offer other premium cybersecurity products, such as Splunk Enterprise Security, which addresses a lot of the emerging security threats for an organization, Splunk IT Service Intelligence, which monitors the overall health of an organization's infrastructure, and Splunk User Behavior Analytics, which detects cyber attacks and insider threats using machine learning. We've seen that Splunk's revenue has grown almost 6.5 times the revenue it was in 2013, which echoes the growth drivers for the cybersecurity industry that I previously discussed. And another example of a company in this space is Radware. So this company provides cybersecurity and application delivery solutions that helps its users secure business-critical applications, whether it's in virtual, cloud, or in data center environments. And their services help minimize performance degradation and prevent downtime for applications. Nearly all of their offerings are for cybersecurity services. For example, their Defense Pro device is a real-time attack prevention device that protects application infrastructure against network and application downtime. Their Cloud DDoS service provides distributed denial of service protection to detect and mitigate attacks, whether it's at the network, server, or application layer. And the last company we have here is OnLog, which is a great example of another company in this space. This company develops anti-software solutions for network servers, PCs, and data systems. Their advanced threat defense segment offers solutions for complete threat protection against malware and provides real-time blocking of malicious network traffic. Their endpoint protection segment provides a centralized security management for an organization to be able to provide multiple security solutions against cyber attacks. So the examples of these three companies that I've given here shows the variety of cybersecurity services from hardware to software that are offered to organizations to protect themselves from cyber attacks. All of these names and many others are part of the Nasdaq CTA Cybersecurity Index. So to summarize here, the analysis that I've discussed shows that cyber crimes have increasingly affected multiple industries in numerous ways, thereby boosting the demand for cybersecurity services. And the continually increasing number of targeted attacks is driving the growth in cybersecurity services, as major governments, such as the US government and venture capital firms, have continued to pour money into cybersecurity companies. And in addition to the high projected growth rates by various firms and analysts, cloud security, IoT security, and the increasing cybercrime costs are going to continue to drive the spending in this industry going forward. So with that said, I'm now going to hand it off to my colleague Dave, who will now talk about the Nasdaq CTA Cybersecurity Index and the ways in which it offers a diversified exposure to the cybersecurity industry. Dave, you want to take it from here?
Thank you very much, Gaurav. And good morning, Australia. I hope everyone is doing great on this day. And so I'm going to dive into the indexing on cybersecurity. So Gaurav did a great job in really laying out the business dynamics of cybersecurity and really a lot of the things that we all know and we all deal with on a day in and day out basis. So much of our lives, whether it's commercial, whether it's industrial, whether it's social, banking, financial, all ends up online. And we are all aware of the very importance of cybersecurity and trying to protect that and trying to make a reasonable and safe, really economic venture when it comes in the world. And so, NASDAQ, as a premier global index provider, we really started looking at this space in late 2014, early 2015 as a way to try and benchmark these names that Gaurav was referencing and trying to capture the ethos of cybersecurity as an industry. NASDAQ as an index provider has tremendous experience when it comes into these thematic technology-related themes. We've been engaged in this space really for now actually approaching 15 years, where we have been trying to capture the truly unique and truly innovative indexing aspects. And we feel like cybersecurity was a perfect aspect of that. So when we launched this index in 2015 to benchmark this space, we've been exceptionally proud of the performance of the index that we'll get into in later slides, but also the representativeness of the index. And so being able to keep up with our partners, the Consumer Technology Association, a massive organization here in the United States when it comes into technology, and really living at the bleeding edge of technology, helping us in terms of identifying securities in this space. So where do we start? So as a whole, we are looking at, as Gaurav laid out here, securities that are involved in building, implementation, management of security protocols, really to protect the public and private networks, computers and mobile devices. So looking at the previous slide, you see we built out some minimum market characteristics, so market cap of 250 million, average daily volume of 1 million, a float of 20%. Really, those are characteristics here designed to embed liquidity. But on top of that, knowing that this space is still nascent from an investment perspective, we get into that in some later slides around the size of the companies, we added a modified liquidity weighted methodology. So we actually weight these securities that have been identified as being cyber that qualify through our screening process by average daily dollar trading volume. That means the more liquid name will have a higher weight, and the less liquid name will have a lower weight. We do cap. It's capped. That's why it's modified. So no security will be greater than 6% And so there's still well diversified, but there's also good liquidity. And that really, from an index perspective, is extremely important. So when we partner with great ETF providers like BetaShares, they really need to be able to have a nice liquid index that they're able to trade. So when they deliver product, the end users has a great experience off of that. So we move on to the next slide. We start to look at what is the makeup of the index. So we covered the rules, we covered how we go through the selection process. Now we see what that first result is. And one of the really interesting things here with cybersecurity, again, as I call it, a theme, a thematic investment perspective focused in and around technology, the first thing that really sticks out is that almost half the index is not traditional technology. Yes, 55% of the weight, if you use the ICB, that's the industry classification benchmark schematic that Nasdaq utilizes, a little more than half the weight is in technology. But you have defense, traditional defense as a weight, telecommunication, business support services, which is a classification that covers just sort of general industrial related names. And so you see that these components are classified across numerous sectors. And that's why our partnership with CTA from a classification perspective is so important, is that we're able to look past the high level, almost to say generic classification efforts and really hone in on the specific names. And that's one of the aspects that we think really gives us a great exposure story when you're looking to take advantage of really the industry and the outlook that Gaurav was speaking about in the earlier slides. The other aspect is it becomes a very different technology investment than you would see in other large cap tech investments. So looking here into the next slide, what we look at is average market capitalization of securities within the Nasdaq Cybersecurity Index and average market cap within the Global Tech Large Mid Cap. And Nasdaq Global Tech Large Mid Cap is just your traditional benchmark when it comes into technology names. So Apple, Facebook, Google, Amazon, et cetera, they fit into this. And you see that average market cap exposure is extremely large, 41 billion US dollars in market cap. Those are traditional large cap names filled with mega caps. But then when you look into the cybersecurity space, you see a far smaller average market cap, and that's at 14.7 billion, and that's after some nice run up here in performance as we get to. And so when you invest in cybersecurity, when you look at the index of cybersecurity, you see it as a complement to other technology-related indexes that you may be looking at or you may be using, because most of the names within the Nasdaq CTA Cybersecurity Index will either not be part of a traditional large-cap tech index or have an extremely small weight in there. And so if you think, oh, I have a tech investment, I can have exposure to cybersecurity, in reality, you actually don't get that exposure because of the way that traditional market cap weighted indexes work. And so what is one of the things that you miss out on that? Sales growth. As Gaurav pointed out with some great data laying out the industry, you would expect to see significantly higher sales growth in these cybersecurity names than you would traditional tech. And if you compare the sales growth to traditional industry names, so banks or miners or healthcare, it's even more pronounced. The difference of top line revenue growth or sales growth. So on a 3-year average basis, you're almost at 50% sales growth there compared to 21% in traditional technology. We know traditional technology has been significantly growing. You can just look at the Nasdaq 100 as a preeminent benchmark in that space, where you can see the performance, you can see the top line growth on those names, and yet cybersecurity is really able to drive a higher degree of growth off of that. And one of the things here that really helps drive that as we move on to the next slide is the reinvestment of the dollars these companies are making back into themselves. So R&D is a great metric that we like to look at. Nasdaq uses R&D metrics in a lot of different ways as really an indication of companies who are bullish on themselves, and B, have the internal capability to actually leverage the free cash flow that they're generating. And so as a percentage of sales, you see that the cybersecurity companies are ahead of the traditional technology companies. Again, that's far and away ahead of traditional industries. And so you have an outsized percentage of the revenue being generated, the earnings being generated, going back into themselves, back into being on the cutting edge, being able to combat the next cyber attack, being able to help large companies, large banks, large conglomerates in terms of protecting themselves, ultimately protecting us as consumers, as individuals, as employees, to ensure that we can go about our lives online, which is extremely important, in a safe manner. The other side is you see that the companies here on the Nasdaq Cyber extremely global in nature. So a very high percentage of the revenue, over 40%, coming from outside the U.S. So this is again indicating that cybersecurity in terms of defense is a global issue. It is not something that just pops up in the news in the U.S. because there's I'm trying to think of the most correct term I can use to describe the current president we have. That won't upset anyone, but we have this guy in charge, and he causes a lot of consternation when it comes into the cyber world. But we see this is actually a global issue, and that's one of the aspects here. Again, a big component that we can bring to the table here with the Nasdaq Cyber Index. Okay, so let's take a look and see what that means then from a performance perspective. So we look at the next slide. We finally bring in here what the performance issue has looked like over a couple different periods of time. Here, the first chart, Nasdaq CTA Cybersecurity on a total return basis. That's the gross reinvestment of dividends compared to just benchmark Australia equities, benchmark global equities, market cap weighted, and you see sizable difference in performance from an annualized basis and just the 1 year numbers. You see a significantly higher return here from these cyber names, and ultimately, I think what ends up driving a lot of this excess return from the cyberspace is a lot of what Gaurav was pointing to in the initial slides. Really putting together and bringing things together to show the demand is there, the companies are innovative, and the companies are delivering results, and they're in need. There's demand off of that. So again, next slide, we have some additional performance charts. And again, I believe this is all material that is able to be accessed. Myself, Gaurav, we can work with our great partners at BetaShares to provide even more data on the performance side, individual components, if you would like to see that data. And one of the things I would point out again is especially that the chart to the right here, the total return performance, July to July, 17 to 18. And you see the big jump here in cybersecurity, and that's really at a time when we've had outsized volatility for the first time here in the start of 2018. It kind of shook a lot of the global markets, especially the technology market here in the U.S. But cyber was able to remain strong, able to sort of separate itself from broad equity investments, and this becomes then part of the aspect of being able to take advantage of a known theme, something we experience every single day, something we read about every day, something we hear about on the news every day. We're able to see companies that are generating positive revenue growth, are making money, and are reinvesting that money back into themselves. And over the last year here, you start to see the reward of that coming from a performance perspective. And as the industry's importance continues to grow, this can become something that we would anticipate having through. And then when it comes into the beauty of the Nasdaq CTA Cybersecurity Index, we have a robust process in terms of identifying, selecting the securities. We have an excellent weighting methodology which ensures that we have underlying liquidity, and that allows for a dynamic index, an investable index, and most important in this particular thematic space, a representative index. And so as we get to the next slide, which I'm personally going to argue is the single most important slide here, that is the disclaimer. So please, everyone, take as much time as you need on this slide to read through it. As you do, I will say, as a proper rugby fan, I wish Australia the best as the championship here gets started. I am hoping I can actually find myself down in country for one of the matches this year. So please enjoy the disclaimer, and I will flip it back to our great partners at BetaShares. Thank you very much.
Thank you very much, Dave. Politically correct and supporting the right team, so that's a great combination. I'd just like to hand over to Adam O'Connor, and he'll just talk you through the BetaShares portion of the session.
Thanks, Dave. That was brilliant. So on this slide here, we've just got some key details on the BetaShares Global Cybersecurity Fund, ticker HACK, which obviously aims to track the performance of the Nasdaq CTA Cybersecurity Index, which Dave was discussing just then. Just some key points on the fund. The MER on this fund is 57 basis points, and it is a global fund. It has exposure to companies not only in the US, but also in the UK, Asian developed markets, and also, I think, quite importantly, worth highlighting Israel, which is actually a powerhouse in terms of cybersecurity and a bit of a hotbed in cybersecurity startups. Gaurav mentioned venture capital funding and how important that is. As a nation, Israel is actually second only to the US for cybersecurity investment from venture capital funding. And also, as Dave mentioned, a lot of these companies that are in the index have diversified global revenue streams. It is, unlike many of our other global sector exposures, this one is an unhedged exposure. So, look, I think just talking from a BetaShares perspective, I think the interesting point to touch on is where we're seeing HACK being used in investor portfolios. And the relative size of the assets in terms of inflows that have come into what would have once been, I guess, considered a niche exposure over the course of the last 12 months. And I think this comes down to the fact that as an investment exposure, a fund like HACK provides Australian investors with exposure to a structural trend that they may not have otherwise naturally had exposure to by simply investing on our domestic market. As the kinds of companies you get exposure to in HACK, they're just not currently accessible on the ASX, particularly in terms of the size and the scale of the companies that make up this index. And as an ETF manager, we think this is a theme that we believe we're increasingly seeing across the ETF market. As Australian investors, really, they're utilising their global equities portions of their investment portfolios to allocate to growth areas like the technology space, which gives them exposure to these kinds of structural trends that they can see happening in their daily lives, but which the companies that are really leaders in the relevant space, they're not currently accessible on the Australian exchange. NDQ, our Nasdaq 100 fund, for example, which Nasdaq obviously provides the index on as well, that fund counts Apple, Amazon, Microsoft, Google, and Facebook as its top 5 holdings. That fund's the leading ETF exposure for US listed equities on the Australian market for inflows year to date. So likewise, with a thematic exposure like HACK, I think this is where the ETF structure arguably provides its greatest advantage to the Australian investor, in that it really gives them a way to have exposure to an investment trend that they can identify as being extremely relevant to the world they live in into the future, but is dominated by companies listed outside of Australia. So I think if I could speak to a couple of points on the investment trend itself and add somewhat to what David and Gaurav covered. I spoke about being able to get exposure to a thematic that you can see being relevant into the world we're likely to live in the future. Gaurav mentions in his report that the largest areas of growth in the cybersecurity market are mobile security, in terms of our phones really replacing PCs in much of our day-to-day digital lives, but also the Internet of Things. Now, for those of you that aren't familiar with the Internet of Things as a term, the Internet of Things is used to describe the way in which interconnected devices speak to one another on a network. And I think one of the easiest ways I can describe the Internet of Things is the way that a Fitbit might monitor your run or your exercise and feed that info back into your phone or your device there. That's an example of two devices connected on a network speaking to one another and feeding data to a central location. Now, two of my favorite hacking examples really give a good insight, I think, into how all this increased connectivity creates vulnerability for hackers to exploit. And of course, big business for cybersecurity providers in attack prevention. But also why we're seeing this become such a major concern at board level for companies, and we're seeing corporations, increasingly willing to spend big dollars on cybersecurity investment. The Target hack, which we have up here, that happened in 2015, and it's still to date considered one of the largest in history. So in this instance, the hackers gained access to Target's corporate network through an internet-connected HVAC system, which is effectively a large air conditioner which feeds data back into the main system, and that was managed by a third party. And what they did is they were able to find a vulnerability in that air conditioning system, and they were able to put malware through the Target's main network onto the company's point-of-sale systems nationwide. And in doing so, they stole the credit card info of 40 million shoppers over a 2-week period, and that was over Black Friday sales in the US, which, as you can imagine, is the biggest retail sales period over there. Now, not only did that attack cost Target close to $150 million, I think the important thing is it also cost the CEO his job. And I think that really highlights, as I mentioned, why at board level, cybersecurity has become such a crucial business investment for so many companies. If CEOs' jobs are on the line, they become much more concerned with preventing these kind of threats and the reputational damage it can do to their company. You also see on this slide reference to another major data breach, one that occurred at JPMorgan a couple of years ago now. And I think the important point here is that in the wake of that attack, the company actually doubled its cybersecurity spend to $500 million. And that increase in expenditure, as you can imagine, was reflected across the whole banking industry, which, according to FireEye, who are also a threat detection company in the index, actually receives more threats than any other industry that they cover. The final example I will mention, which I think people find quite interesting, happened earlier in the year, and I think in terms of Internet of Things being a major growth driver, it's probably one of the clever examples that I'm familiar with. Actually happened at a casino in Vegas, and hackers got in via the fish tank. So the casino had installed and connected the fish tank to the network via a device which was able to measure the temperature and regulate the feeding and feed that back into the central server. In doing so, they were able to, they stole about 10 gigabytes of data and sent that to an external source. Now, they never revealed what that data was, but given a casino database, you can probably imagine that it held a lot of personal information from particularly potentially a high roller database. And just to give you an idea, that sort of data is then sold on what they call the dark web and has then been seen to be used in fraud, which is similar to what happened with the JPMorgan data breach. So we've got up here a few of the larger companies in the index, which you can, which we do have collateral on that goes into them in a little bit more. But the next page is just a bit of a case study on one of the bigger companies in the index, and one I think is particularly interesting. And their whole business is actually built around network security and preventing these kind of cyber attacks, particularly cloud-based and Internet of Things and network breaches in that respect. That company is Palo Alto, and so they're considered a world leader in firewall technology, mobile security, and cloud-based security. And I think you can see here, over 85% of Fortune 100 companies are their customers. But I think the recent results probably highlight the growth that we keep referencing in this area of the market. 31% year-over-year revenue growth and 30% growth, 33% growth in billings year-over-year. So just having touched on that and some things I think are interesting, I might actually bring the guys in from Nasdaq just on a couple of discussion points that I think they may be able to provide some additional insight on. So Gaurav and Dave, we've talked a little bit about the Internet of Things, but one of the things we talk about in terms of disruptive technology, things like AI, robotics, automation, even driverless cars and 3D printing, these are major investment thematics globally currently and have a number of ETFs tracking indices that look at these investment thematics. I mean, do you have any thoughts on how cybersecurity ties in broadly with these things?
Yeah, sure. This is Gaurav here. So, I think that's a great question. I think that going forward, cybersecurity is going to play a key part in all of these other disruptive technologies. And, one example I'll provide is with like driverless or semi-driverless cars. So, as vehicles, as we start to, see more driverless and semi-driverless cars, these vehicles are going to start to communicate with one another as they become more autonomous. So there's clearly a very real security threat that needs to be addressed here. And, what can happen is hackers can infiltrate a vehicle through a minor device like an infotainment system. And then through that device, they can control the vehicle's brakes or engines or other areas of the vehicle. And this scenario was actually shown to be possible back in 2015 when a group of people did a remote hacking demonstration of Jeep vehicles. And, this example shows that cybersecurity is going to play a key role in the evolution of these other disruptive tech themes, because as, like you were saying, as more and more devices and objects and people are connected to networks through the Internet of Things, the greater the need there is to secure all of these things.
Yeah, definitely. I mean, there's similar to the Jeep hacking. I think there's the interesting one with, we see healthcare innovation and pacemakers. There was, when was it, last year, that I think it was St. Jude Medical recalled 450,000 pacemakers because they were found they were potentially vulnerable to hacking and had to patch the vulnerability there. So, but in terms of, do you have any data or information around industries that are being particularly targeted by cyber attacks and the form that those attacks are taking?
Yeah, absolutely. So, in terms of the number of data breaches across multiple, different industries, we see that the healthcare, accommodation, and public sectors have the most number of breaches. And actually, if you go back to the first slide, or like one of the first slides I had that showed the big table in there, you can see that table will provide a pretty, that one right there. So that table will provide a pretty good idea of how this multiple industries are affected. And to give some specific numbers around that, so there were about 300, over 300 breaches in the public and accommodation sectors, and the healthcare sector actually had over 500 data breaches last year. And just to give it, put in some context, the sector that had the lowest number of data breaches was manufacturing at 70 data breaches. So if we break down these incidents and analyze them, we can see that for the accommodation industry, it's really point of sale intrusion that we're looking at as the biggest culprit, and almost all of that is externally driven. And if we take a closer look at healthcare, it's actually surprisingly almost exclusively internal, meaning that it's really been employees of healthcare companies misusing the data or accidentally gaining access to data systems they weren't supposed to have. And in the third sector that we saw a lot of cyber attacks being targeted at was actually the public sector. And this is very interesting because it was mostly cyber espionage taking place between other countries trying to get, really critical state information from the U.S. So, it's important to note that while these three, industries were affected the most in 2017, all industries are exposed to cyber attacks, and it's imperative that every industry has, some safeguards around protecting their infrastructure.
Brilliant. I think I've just got one more before we take a few from the audience here. But one that we get a lot in the report, you talk about sales growth rates of these companies that are producing, and also their investment in R&D. So, just in terms of valuation metrics, how do you guys measure cybersecurity companies? I think PE obviously not being as relevant as it may be to more mature companies.
Yeah. I think that's a great point. And if you look at traditional valuation metrics, like you're saying, price to earnings ratios, or even free cash flow or dividends, those all fail when it comes to the cybersecurity space. And actually, these metrics fail for almost all tech-related themes. And because cybersecurity is still relatively in its early stages, all the companies within these niche areas are not really focused right now on their bottom line growth or delivering free cash flow to shareholders, but rather they're really focused on rapidly growing sales and thereby capturing, potential market share from the competitors, and they're also focused on investing for innovation. So these are really the reasons as to why we've shown the data before on sales growth and R&D to sales, because these metrics really highlight the ways in which these companies are investing for the future and could possibly deliver values to shareholders once their businesses mature. So, we really believe that R&D and sales are really two key valuation metrics to relatively analyze companies in the space.
Brilliant. I think we've got one here from the audience that we might see if you can cover. I think they said we're talking about phones and other devices. That would the companies which produce these phones and devices devise their own security measures to effectively bypass cybersecurity firms? Do you see that as a threat to the cybersecurity industry at all?
No, I don't think that's a threat to this industry at all. I think that I think one example I'll give is actually like a company, VMware. So not quite putting out phones and devices, obviously, but VMware is a company that provides cloud computing and platform virtualization services. And on the surface, you would think that VMware has nothing to do with cybersecurity, but you have to consider how the cybersecurity landscape is really evolving. So when we are talking about platform security or security management, it's traditionally been operating systems and networking vendors that have taken the lead in providing cybersecurity services. But cloud computing is actually changing that entire landscape. So, because cloud has become this new platform in which, security solutions are really embedded on it. And, cybersecurity companies become a key part of cloud servicing. And this is what makes VMware very interesting, because as a cloud computing platform, they're providing they're providing cybersecurity services on top of their cloud platform. So while they're heavily involved in cloud computing space, they're also heavily involved in providing cybersecurity services. So, if other phone makers and device makers provide their own security measures, that's certainly a very positive thing for the industry, because it's users being ensured that their data is being accurately protected.
Yeah, that really shows the breadth of the companies that we're that we're dealing with in the index. I'd just like to ask the audience, as we sort of come towards the end of the session, just some things to consider here before you do some further research and before you decide if you'd like to make an investment. Our website and the fund page does have the relevant fact sheets, PDFs, and additional information that you need. Thank you, Dave. Thank you, Gaurav. You've sort of highlighted just an absolutely fascinating investment case and also some very scary examples. I've probably just got one more question, and then we'll wrap it up. Just thinking about, I guess the breadth of the issue here. So what's the evidence that these companies' services are working? So as much as we've got these companies working and stopping cybersecurity, these hacks are still happening. So do either of you or anyone have a comment on that?
Yeah,
yeah, go ahead, sir.
Okay, go ahead, Gaurav. Take it.
Oh, I was just going to say that if the evidence of that, these companies' services actually working is that, yes, we do see a lot of, cases in the news of, cyber attacks and, but, every organization has safeguards around cyber attacks. And I think that if those safeguards weren't there, we'd be seeing many more incidences of cyber attacks occurring. And, at the end of the day, hackers are going to find their way around these measures one way or another if they really want to, infiltrate various infrastructures. But I think the services that these securities offer is more than adequate, and that's shown in the revenue and growth. That's shown in the growth in revenue and also the share prices of these companies, and that's reflected in the performance of this index.
Yeah, I think the last one,
if you don't mind. Sorry, the one thing I'd like to add there is just, as a, Nasdaq, as a publicly traded finance company, we are kind of, we exist in this world. We invest a lot in our own cybersecurity to protect global markets. And, I think it's while there's a lot of name brand attacks, obviously WannaCry is a great example, right? It's a clever branding. And, the number of attacks are up, but it's the number of attempts that are really the unknown. Companies aren't going to report the number of times that they've blocked an attack. And so you really don't understand, we don't really have the great scope of what is all the successful defense. A great defense is often unrewarded, compared to the news and flowing of a great offense. It's almost similar to that of, traffic accidents. You can say car technology has improved, car safety has improved, and traffic accidents aren't going down. In fact, they're going up. But other aspects of them are less dramatic than they were perhaps in the 70s, 80s, or 90s type of thing. And so I think it's consistent where the technology is working, and there's going to be times we don't hear about it working, and there's going to be times where the result is less dramatic than it would have been had the technology not been in place.
Yeah, excellent answers and great comments there, guys. Anything finally from you, Adam?
Yeah, there is one question here saying, is hack available on any superannuation platforms? I think for those self-directed investors that can execute on online brokerage accounts, it's as easy as buying a stock. So the ticker here is hack. If you have an advisor, contact your advisor. There are some superannuation platforms we know that have a direct equities option. I think ING and Australian Super have both of those, and I definitely know hack is available on the ING direct platform. And the last one, will the slides be available after the webinar? Yes, they will.
Yes, they absolutely will. Thank you so much for your time. We've had an outstanding response and attendance today, and really just so lucky to have such experts from the States and obviously in the room talking about this, this mega trend investment thematic. So thank you very much for joining us. We look forward to your attendance at our next webinar. Thanks, Dave. Thanks, Gaurav.
Thanks, guys.